Hi everyone, and welcome back to today's segment on Financially Fit with Katie. So today what we're going to talk about is everyone's favorite, taxes. So with COVID-19, that has impacted the tax season, and as you probably are aware, the filing deadline has been extended from April 15th until July 15th this year. So right now, if you have not filed your 2019 return, you have just about a week to get that done. So whether if you're able to file it yourself, if not, you are going to want to look up in your area to see if there are places that are taking walk-ins. If you might be able to find a firm that is accepting new clients, you do want to make sure that you take care of that. Now, if you have a more complicated return and for some reason you're still waiting on information and you're not going to be able to file, you want to make sure that you put the request through for the extension, and then also if you are going to owe on your return, you want to make sure that you make that payment because you do not want to start accruing additional penalties or interest on that. With that, the next item I want to go through is IRA contributions. So along with the tax filing deadline, which was extended, they've also extended and are allowing you to make contributions for 2019 tax year up through July 15th. So if you are planning on or are able to make a contribution, you want to make sure whichever institution is holding the investments of where you're making that, whether it's an investment company or you have an IRA or a traditional IRA, Roth IRA at a bank, you want to make sure that they have that credited as of July 15th and that they code that as a a prior year 2019 contribution. With that also, the amounts that you can contribute, they were increased in 2019. So you were able, within your employer plan, you could do up to $19,000, and then if you are over the age of 50, they allow additional catch-up contributions. Now for the traditional IRA and the Roth IRA, also that limit was increased, so you were able to do in 2019 $6,000, and again, if age 50 or over, you can make an $1,000 additional catch-up contribution. So you want to definitely make sure that you take advantage of that. The next item that I want to talk about is the simplified tax standard deductions. So one of the more notable changes that occurred with the Tax Cuts and Jobs Act of 2017 was the increase in the standard deduction for taxpayers. The increased deduction reduces taxable income. However, what it did do is a number of individuals in previous years that were able to itemize on their tax return no longer would be able to do that. Now, this increase in standard deduction, if you are single or married filing separately, that number is $12,200. If you are married filing jointly, that number is $24,400. And if you are head of household, that number is $18,350. Now, with that being said, if you believe that maybe you're going to do the standard deduction, but maybe you might have enough deductions to still itemize on your return, you want to make sure that you're keeping track of that. So maybe you're in a newer home, so you have a higher amount of mortgage interest you're paying, or you had a major medical event, so you have a higher out-of-pocket medical cost, or you've been making, a number of charitable contributions. You don't want to just assume that you're going to take the standard deduction. You do want to prep that return and add in those numbers so that you're able to see whether or not maybe you can get some additional tax savings if you itemize. So that's a big thing to take a look at. Now, number 4 issue that also kind of goes along with the Tax Cuts and Jobs Act of 2017 is the health insurance penalty. So in previous years, if you did not have health insurance, you ran the risk of having to pay a penalty, which was $695. So that has been cut. So there is no longer a health insurance penalty on the federal side. With that being said, I am based in Massachusetts, so if you are a Massachusetts resident and you are watching this video, there's still the penalty on the Massachusetts side. So you want to make sure that you still are recording. You would receive a 1099 HC form. You want to make sure you enter that, because the penalty on the Massachusetts side can get hefty if you don't have health insurance. And then the final thing I wanted to go through is the tax bracket adjustment. Again, these adjustments went into place with the Tax Cuts and Job Act in 2017. So you want to take a look at that. Now, if, say, you know, you look at everything, you say, oh, my income falls in the 22% bracket, you want to take a look and see, you know, what are the brackets before that, because the way that the tax code is set up, not all of your income would be taxed in that bracket. You are taxed, your income gets taxed at every point along the way. Where this becomes important is, say you owe money, or maybe you're getting a refund. If you owe money and maybe you have a couple of $1,000s that falls into that higher tax bracket, that might be a chance for you to then review and say, okay, I have a employer retirement plan. My cash flow is positive. This is a good time to go through and make adjustments, because if you can increase the amount you're putting into a retirement plan through your employer, you'll actually be reducing your taxable income and could potentially take that income from that higher bracket and move it into a lower. That will give you a big savings in your pocket right now. And because a lot of individuals are not itemizing on their returns anymore, there's not a lot of places where you might be able to get deductions. So that is right there one big point that you want to look at. Now, another thing along with that, and this becomes more important, I see it a lot in married filing jointly where both spouses are working. You really want to take a look at your individual incomes, take a look at your W-2s, but also take a look and see where you fall into on the tax bracket worksheet, which I am going to attach in the description. Where that becomes an issue is you may all of a sudden find yourself in a position where in previous years you received a refund and now all of a sudden you're having to pay. So you want to take a look, see where you fall, and then see whether or not you need to make adjustments in your W-4 on how you're having your taxes withheld from your pay. And there are different strategies that you'd want to look on that. And that would be something that you would want to discuss with your tax preparer. Or if you're working with a financial advisor, you can talk to them and they can help you with that. Now, the last kind of point on that is if you receive a large refund, so maybe you get, you know, $6,000 or $7,000 back on taxes and you're all excited. But maybe during the year you struggle, you know, paycheck to paycheck. It would do you much better to have that money to use during, you know, the week or during the month, rather than, as I see it, you know, the government's holding your money and you're not getting interest on that. So on something like that, again, you want to review your W-4, you want to make adjustments to your exemptions, you want to get that $6,000 to pay out to you during the year so that you can utilize that. That will allow you to run a much more positive cash flow, which we will go through more of that, you know, throughout these segments that I do. But this is where it is important. If you're watching this video and you're like, I already filed my 2019 return, that is fine. Still, take out that copy. And if all you do is look at what your adjusted gross income is and what your taxable income was, take a look at these brackets and see whether or not there's any adjustments that you need to make. And taking a look at your employer sponsored plan, what is that contribution that you're making? Can you go up higher? Will that give you true savings in your pocket? And do you have additional money to be setting aside and maybe utilizing a traditional IRA? Or if you're already contributing to an employer plan, could you take advantage of a Roth IRA and get in some after-tax savings? So that's today what I wanted to cover with you. Thank you so much for viewing. Again, if you have not subscribed to my channel. If you could hit the like button and share, that would be greatly appreciated. And if you do subscribe, that will allow you to receive notifications when new content has been uploaded. Thank you all very much. Stay safe, stay healthy, and I'll see you next time.